Welcome back to News Now on ET Now, and let's talk about the inflation print because inflation concerns rise in India with the latest print for May coming in at a 16-month high of 3.93%, just below the RBI's medium-term target of 4%. Now, the uptick in inflation is led by price increases fueled by supply-side disruptions on the back of West Asia war. And let's discuss the latest number with our experts. And let me welcome Mr. Indranil, who is the Chief Economist at Yes Bank, as well as Garima Kapoor, Economist and Senior VP at Elara Capital, joining us on the show. A very good morning, both of you, and thank you so much for your time. And Indranil, let me come to you first. Help us with your reading on the inflation number versus the expectation that you were having, because this number is seen to be elevated at a 16-month high, but is still below the RBI's estimate.
We were definitely expecting a slightly more elevated number at 4.1. And one of the principal reasons is we were reflecting the Doka vegetables, which was showing an increase of 17% in May. That possibly has not materialized, which has led to a little bit of lower food and beverages inflation. In terms of the transport sector, where the fuel lies, we were expecting the month-on-month to be slightly higher. And these two account for the 20 basis points lower number that we see from our own estimates.
All right, but Garima, let me come to you as well. Help us understand, is the worst behind us, given that some indications on the talks between the US and Iran are on the anvil, or do you believe that the inflation can continue to rise for a few months more?
See, even if the deal with Iran is struck today, or let's say next week when the G7 meets, two things have to be remembered here. The pass-through to inflation is always with a lag. Commodity prices start to see it in WPI first, because a large part of imported inflation gets captured there, and the impact on CPI will play with a lag, number one. Number two, the impact depreciation of the rupee also will play out, and that will also be gradual in nature. Everything put together, quarter one per se will probably see inflation now in the hands of about 4%, but going next quarter, that is quarter two, quarter three, and quarter four, inflation will be measurably above 5% throughout the remaining part of the current financial year.
All right, but Garima, within the components of the inflation, do you believe that the vegetable as well as food prices, they specifically are likely to remain elevated through the coming months?
See, there are two impacts that are playing out on food prices in general. The one component is, of course, the fact that you are seeing diesel prices, freight costs, and every other cost, including in terms of transportation increase, including that of LPG. That's why you're seeing an impact per se on food. But the food prices has another component which is reflected by LPG, which is, of course, your charges and hotel charges. So hotel and restaurant charges have really seen a significant spike because the commercial LPG prices have also been increased. So food per se is reflecting in two ends. One is the vegetables and fruits that we buy, and two is the processed food as the eat out component of food. Now, going ahead, El Nino per se, of course, remains a significant risk, including the fact that IMD has projected monsoon at 90% of long-term average. But one caution and one observation here. A long-term data about last 20 years of El Nino, La Nina, and neutral years suggests that the impact of El Nino into various macro variables, including that of output of agriculture, as well as the output of cereals, both rye, paddy, as well as wheat, and then the pass-through to inflation is gradually weakening. So it will be very difficult to extrapolate what happened in the previous episodes of very severe El Nino into the current year. Having said that, El Nino and the likely underperformance of monsoon continues to be a very critical risk to watch out for.
All right, interesting take there. But Indranil, with inflation close to RBI's 4% target, does this change the outlook for interest rates? And do you believe that the stance can likely be changed in the upcoming RBI meetings?
I think immediately changes nothing in terms of the fact that the domestic inflation is, as I said, is relatively muted compared to what the expectations were. from the market perspective. So if that continues, then I think the holding power of the RBI increases. Now, remember, we are anyways expecting the consumption demand to slow in FY27 in reflection of the West Asia crisis, lower export demand, etc. And the RBI in the previous policy also had clearly made it a point that they would want to avoid missteps in terms of the policy at all points in time. So to that extent, I think the holding power of the RBI increases. Whether they finally hike rates in the current financial year or the calendar year needs to be seen given the projection or the developments on the inflation front.
Indeed, but along with that, Garima, now geopolitically, there's so much that is happening, and that is indeed making an impact on the inflation. But as per you, what are the biggest upside risks to the inflation right now? Could it be oil, the weather conditions, geopolitics, or something else?
See, the biggest risk right now, because the geopolitical risk is something which is a known variable now. We know really where we are. Yet, if you should notice, although the Hormuz has not been opened up completely, and even as both parties, that is the US as well as Iran, keep going back and forth regarding a prospective deal, the oil prices have gradually been correcting. Now, there are two elements to this. One is, of course, everybody anticipates the deal will get struck today or tomorrow because US is really not on an offensive as it was earlier. And number two element in all of this is that at elevated prices that we are seeing, there's some bit of a demand destruction that already starts to play in. So I would say the worst in terms of geopolitical risk is behind us. The measures that RBI and the government have announced last week also indicate that you do see a decent visibility of debt flows for the financial year 27. That should to a large extent take care of current account deficit. So probably the worst in the rupee is also behind us. Now with these two factors probably already in the price and we know the worst is behind us, the only risk that remains unmeasurable or something to watch out for will be the El Nino risk.
All right, but lastly, Indranil, let's talk about the expectation with respect to the rural versus urban inflation. Why rural inflation remains elevated? What's your take on that?
Well, as I said, the prices of food items have actually been going higher. And if I really look at the foods and beverages month-on-month momentum, it was a 0.9% for May compared to a 0.2% in the previous month. And with the momentum of the food going higher compared to the overall basket, the headline number, the weightage of food is higher in the rural segment, and that possibly what explains the higher trajectory in terms of the rural inflation. So that is something that also needs to be tracked in the ongoing period in terms of the El Nino, the hit on the monsoons, and what its implications are in terms of the inflation numbers.
All right, but with this, Indranil as well as Garima, we let you go. And thank you so much for taking the time out and joining us on ET Now. But with this, viewers, we are completely timed out in this edition of News Now. It's a goodbye from me and the entire team. Thank you so much for tuning in.